Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and if Bitcoin didn't exist, we would all be forced to care a lot more about politics right now. But those of us that have exited the system no longer need to be distracted by the smoke and mirrors that is politics, and instead we can focus on what's important, which is accumulating as much Bitcoin as possible. Shopify competitor Launchcart has integrated Bitcoin and Lightning payments. So this is adoption. I love to start off the videos I do with something like this that just illustrates that the adoption for Bitcoin is snowballing. It really is building momentum. I'm seeing more and more of these things every day, and I absolutely love to see these sorts of things, as I'm sure you do as well. I'm a bit late to this, admittedly, because this was posted on the 9th of August, but Curve Finance has been hacked with 573,000 stolen so far. So I say this fairly often, every 5 or 6 videos, but get your crypto off exchanges. What are you doing? What are you doing if you're still keeping crypto on exchanges? Get it off. Not your keys, not your coins. $10 trillion BlackRock has launched its first institutional trust for spot Bitcoin exposure. Do you realize how big this is? When BlackRock own everything. When they are launching an institutional trust for spot Bitcoin exposure, then this validates Bitcoin beyond all belief. Keep in mind, it was BlackRock that put pressure on Elon regarding Bitcoin energy consumption when Tesla first bought $1.5 billion worth of Bitcoin. And now BlackRock is diving headfirst into Bitcoin, effectively telling the corporate world that Bitcoin is legit. Go ahead and buy some. And lastly, whilst we're on the subject of BlackRock, let me just play you a clip to show you exactly what the CEO of BlackRock had to say on Bitcoin.
And he spoke about Bitcoin and two of, one, monetary policy, 2, and 3, COVID. The hits on BlackRock's on our website was 3,000 on COVID, 3,000 hits on a monetary policy, and 600,000 hits on Bitcoin. So what that tells you is Bitcoin has caught the attention and the imagination of many people.
So there you have it. Moving on, we've got this from T-Analyst. Look at this. Bitcoin is ready for a massive bull run, says T-Analyst. And you can see back here when we put in the lows into the end of 2018, before going on a parabolic rise to 14K from around 3,000, we can see the MACD indicator is posted one of these signals. Fast forward to today, and the MACD is putting in the exact same signal. So does this mean Bitcoin is about to enter a parabolic uptrend? Game of Trade shows that the bear market bond optic stays below 60, but in a bull market, the bond optic stays above 40. We're only 1 point away from a switch towards a bull market sentiment. So markets are on an edge at the moment, and I'm going to get to that in a minute with the charts, but we are literally only 1 point away from changing to bull market sentiment. So this could be enormous. However, the volume analysis shows weak momentum in Bitcoin's current rally. The light volume during reversals dampens the strength of the underlying uptrend. Volume would need to show up on a breakout for this to be convincing. So you can see here the volume profile is weak for Bitcoin. What we need to see is a lot of volume come in on a breakout. Now I think we've got a good something like 10 to 14 days of rally left in this before it's going to drop into a cycle low. So I'm positioned for that. However, I also have a bearish case for Bitcoin, and I will get to that in just a moment. So stick around if you want to see that. Lastly, I wanted to cover this. Some say the stock to flow model has failed. Yes, EMH, this is efficient market hypothesis, says it's impossible. There is autocorrelation because nothing happens between the halvings, and we cannot apply co-integration tests to non-random stock to flow data. If you don't understand what these words mean, I'm going to go back and break this down in just a second. But Bitcoin did pump after the 2020 halving, and in Plan B's opinion, and in my opinion, Bitcoin will bounce back to the stock to flow model value. So there's a lot of big words in here. Let's go through this and break this down. Some say the stock to flow model has failed, and they say that because we didn't reach 100K back here in 2020 or 2021, and since then we have drifted quite far below this. So first of all, he says, yes, efficient market hypothesis says this is impossible. So what is efficient market hypothesis? EMH states that at any given time, the price reflects all available information in a market. The market already knows what the stock to flow is, especially with Bitcoin, because Bitcoin has a very predictable supply. Okay, it's very well known, very predictable. We know with Bitcoin that every 10 minutes approximately, and on average every 10 minutes, 6.25 Bitcoin is going to come out in a block reward. We know that once we get to a certain number of blocks, which is roughly going to be in the middle of 2024, that Bitcoin's going to undergo a halving, and that every 10 minutes, half of that amount of Bitcoin is going to be generated in the block reward. And we know what the issuance schedule is. We know how many Bitcoin have already been mined. We know what the total supply ever will be, 21 million. And therefore, we know how many are left to mine. So we know with a very predictable issuance schedule how many Bitcoin there are in the system and when they're likely to be released into the ecosystem. As all this is true, efficient market hypothesis says that this is already known and priced into this. Okay, so there is no alpha here. Plan B says there is autocorrelation because nothing happens between the halvings and we cannot apply co-integration tests to non-random stock-to-flow data. So what's autocorrelation? Autocorrelation tells us how correlated two variables are between successive time points. More importantly, it measures how a lagged version of the variable is related to the original variable. So what does this mean? Well, we know that we have the stock to flow in grey here. This goes out forever. And we know that price is lagging. So there is autocorrelation because nothing happens in between these halvings, right? Once the halving, the stock to flow jumps up and then nothing really happens. The stock to flow jumps up and nothing really happens. And finally, he says we cannot apply co-integration tests to non-random stock to flow data. What's co-integration? Co-integration, the analogy for co-integration is a drunk man walking home with his dog on a lead. So if you can imagine a drunk man stumbling home holding the lead of a dog, there's going to be times when they're both walking in tandem, in synchronization together. There's going to be times when the dog is going left and the drunk man is stumbling right. There's going to be times when the opposite is true. As the drunk man stumbles in a zigzag, the dog is going to be stopping to sniff the bushes on the way home, so on and so forth. But ultimately, they will arrive at the house at the same time. And this is exactly what co-integration is. So the co-integration, I like to think of the stock to flow in grey here as the dog, and Bitcoin's price in the red as the drunk man sort of stumbling around. But ultimately, they will arrive at the same place. However, Plan B is pointing out that we can't really apply co-integration tests to non-random stock to flow data, since we know the issuance supply and the issuance schedule, as I've already covered. Since we know exactly how many Bitcoin are in the ecosystem, we can't really apply this. However, Bitcoin did pump after the 2020 halving. And in Plan B's opinion, and in my opinion, Bitcoin will bounce back to the stock to flow model value. I would like to point out really quickly that people are quick to look down here and say, oh, this is broken. This is broken. Look at the gap between here and here. But this is biased only because the price is to the downside. Back here, was anyone complaining stock to flow model was broken? No. What about back here? The gap between the stock to flow and the price back here was way bigger than currently. And this is true here as well. The gap between the stock to flow model and the price was way bigger than it is currently. And so people are very quick to look at this and say this is broken, but of course they're admitting their own biases, and their own biases are, I'm happy when the model is broken to the upside, but I will not tolerate it when it's broken to the downside. So I think it's perfectly possible that Bitcoin could bounce, get some sort of, I'm not saying it has to go straight up in a V, it could certainly make a double bottom and then go, but I think it's more than likely that Bitcoin's price will eventually catch up this stock to flow. And the last thing to point out here is that Plan B has made a new 18-month average stock to flow ratio, which is the white dots you can see, which is much smoother and seems to track the price of Bitcoin much better. This tells us to expect a 6-figure Bitcoin in the not too distant future, which seems more than reasonable to me. If we get the CPI for August at minus 0.4%, this would be deflation. And that would be 2 monthly prints in a row of deflation and massive deacceleration. So for June, we had 1.37%. In July, we had minus 0.01%. And August, the Happy Hawaiian is predicting that we could go back to minus 0.46%. Why wouldn't the Fed just pause in September? He says, my prediction is way below consensus and it would be a surprise. If you've been watching this channel for a while, then you'll know that I non-stop talk about pausing rate hikes to see a dovish pivot in September. That remains to be seen. This isn't an absolute, of course, and that seems to be what the Happy Hawaiian is predicting here. So will we or won't we see this pivot in September? That remains to be seen. But for now, I think this is more than likely on the cards. So I look forward to September to see what happens there. Let's get into some charts. Dollar Can't seem to break out here. Could potentially draw another one of these trend lines, something like this. But so long as this is going to keep selling off, then we can expect risk markets to continue higher. The S&P still in an uptrend, isn't it? Whenever I see big extended moves like this, I always start to think, okay, time to start protecting gains. You must resist this temptation to just start exiting a trade without a reason to. There's nothing to say that this, I'm not suggesting it will, but there's nothing to say that this won't just continue all the way up in a straight line. Okay, yes, that would be unlikely, but it's not impossible. So you must have a mechanical process. You must have a way of ensuring that you do not succumb to your own biases and your own gut instinct. Oh, I should duck out here, because all that does is train bad habits, right? Like, my gut is telling me that this move is coming to an end, but the technicals are telling me there could be 2 weeks of rally left in this. Okay, so until we get a breakdown of this trend line here, until we get a breakdown of that, which is a mechanical exit signal, then I mustn't act, even though my gut is telling me this move is getting stretched. Okay, the same is true for the Nasdaq. So here we go. Breakout coming in for that retest. Can we resume off of here? Now, falling back below this red downward sloping trend line from all the way back here would be at least a technical reason to suggest that this isn't as strong as we thought it was. Similarly, a breakdown of this blue upward sloping trend line would be a mechanical reason to exit the trade on a technical breakdown. But just ducking out here because we've had a big red candle is not a reason, and is training bad habits. So even though I think this move is stretched, you must resist the temptation to follow your gut or duck out in and out of things because of emotions. So I will continue to push this trade until we get a technical breakdown, but I wanted to make it clear that a breakdown of this blue line and I am out, ready to reassess and come back from a position of strength. The VIX continues to remain under this downward sloping trend line, so potentially we got another 2 weeks in the S&P uptrend, and therefore we could expect the VIX to come down here. But a break of this trend line and it will be a long from me, so I look forward to that. So as long as we're above this trend line, no problem holding this. So I will continue to watch this, but we know that this move is quite likely getting stretched as well. It's starting to get more and more uncomfortable, isn't it? So we'll wait for a true technical breakdown to take the profit, but I think this is coming in the not too distant future. I could see this coming as late as 2 weeks time or as early as Monday or even today. So I'll continue to watch this, but I'm just sort of flagging that it's time. I think we're getting close to starting to lock in some profits here. So that's that. Also, one quick thing, I'm going to take all the risk off of this trade now, because there's just no reason to let a big trade like this end up in a loss. So a breakdown of this blue upward sloping trend line and I'll be out of this trade, but I'm going to take all the risk off of this, because even though I'm going to exit up here somewhere at the worst case scenario, best case scenario up here, why would I allow any risk on this trade at all? So that's the UKX. Oil, look at oil breaking out. Now this is interesting to me, but if you've been following the channel for a while, you'll know that I don't like to take positions into the weekend, and it is of course Friday today, so I'm not looking to take on any weekend risk here. Nothing to say this won't get reversed. If this is a true breakout, then there'll be a retest of this downward sloping trend line at some point, I would have thought. So for now, I'm going to leave that long where it is. Kind of expect this to roll over and fail. We could get stricter on this trend line and then it's not truly a breakout, right? It's kind of hard to draw, unusually hard to draw. There's been so many wicks and problems with this. But not looking to long this breakout until Monday. Monday I can come back and look for re-entry. This could well be a problem for the S&P and for other markets, because this could signal that inflation is potentially back on the table and it's potentially going to be a problem. So we do have to monitor this very carefully. Gold getting ready to have some sort of pullback, I think, and then it's going to go. Potentially it could just go straight away. We'll continue to watch this, but I'm really not going to sweat any pullbacks here. Long and strong. We're looking for multi-week rally out of gold. So continue to push this, and I think for me any dips are going to be buyable. Silver kind of making a second flag here. We'll see what happens. Wouldn't be surprised to see some sort of flush out into a sort of big dip, a big sort of scare wick before we go. But equally, not going to go changing anything up here or moving stops around. Just going to continue to push and target the top of this here, this downward sloping trend line. Miners start to get interesting to me after we can see a next daily cycle for gold, which is due in about 2 weeks time. So we're not quite moving yet, but I think we will be in the not too distant future. I am publicly long silver miners here, so that's been doing okay as well. Continue to push. Right, let's talk about Bitcoin. We got to talk about Bitcoin. Bitcoin, I've shown earlier that we've got some weakening momentum. My plan here is, this is the trend, isn't it? A break below this, and how do you justify remaining long? Now, from a cycle count standpoint, this should be the cycle low here. And so where are we? Day 30. So we know that we have 60-day cycles for Bitcoin, so we're not really due a 60-day cycle low until the 11th of September. I'm going to mark that with a vertical line here. So I would kind of expect this to continue to wander up and then drop down into this 60-day cycle low. How low it goes, I don't know. This is just what we expect to see from the price action. This is how we called the long as well. But for now, still targeting up to 28, 32k. Whether it gets that high, whether it fails at 25, whether it maybe goes 28, I have no idea where the price goes. I'm not trying to predict anything. I'm just telling you my expectation is that we will move up over the coming couple of weeks, and then we will drop down into the 60-day cycle low. How low we drop, I don't know. How high we go prior to the drop, I don't know. But my exit for this trade is going to be a break of this blue upward sloping trend line. So that's my plan. Ethereum, similar situation, isn't it? We've got this upward sloping trend line. How strict do you want to be? Remains to be seen. I'm going to add it like here. That will do me. 2200 or into this downward sloping trend line, or a break of this upward sloping trend line, and I'm out. This has been an absolutely enormous trade. We're currently sat up around 72% from our entry, you know, in a month, 72% in a month on this trade. So that was a massive trade, but it is time to start thinking about protecting this. I'm going to take all the risk off of this trade. I'm going to take all the risk off of all my trade now. Actually, there's no reason to have any stops at this point. So zero risk across the board. I'm going to leave the stops on the metals and the miners, but everything else I'm going to have zero risk. So we can take all of the stops off of those. That's fine. And for Ethereum, I've already done it for MATIC. So time to start. The hard part of trading is selling. I've always found this. It's quite easy to wait for a breakout and long it. I think what's quite difficult in trading is to sit on your hands and not do anything, not interfere, not get in the middle, not get emotional, not move stops around. So I do think selling is a lot harder. A lot of people, when they first get into trading or they become investors against their will, they take a long and then it moves against them. They don't have a stop and then continues in a downtrend, and they suddenly become long-term holders waiting for it to get back to break even. So I'm sure you've been there. Most people have. But I'm going to do my best to get out as close to the tops as possible on all of these trades. So make sure you subscribe if you want to see that and turn the notifications on. There's not much to say about MATIC. Still grinding. I've already said, I think once we get a breakdown of this trend line, then that will be an exit for me. And so just a really quick recap. Trend line break and I'm out for the S&P. The same is true of the NASDAQ. The same is true of the UKX. Oil looks to be breaking out. Potentially you could be stricter on this, but I don't want to be, and I certainly don't want to take on any weekend risk or open positions on a Friday. That is not my style. So we'll come back and reassess oil on Monday. Gold, as I've said, long and strong, continuing to push. I'm going to leave the risk on here because I don't want to just get stopped out and have to re-enter, blah, blah, blah. So I'm happy with this entry back here. I'm going to leave the stop on whilst we give it some room. And then once we get up into this neighborhood, we will take the stop off, take the risk off there. This exact same is true for silver. Maybe some chop and volatility, but not sweating pullbacks. If anything, I'm adding on dips at the moment, or looking for a dip to add on, I should say. And going to continue to try to push up towards at least 22, 23, and preferably higher than that, 26, 27. Miners, we're not in yet, but we could be fairly soon after we've seen a clean daily cycle for gold. And silver miners, we are long and strong and continue. Again, I'm going to leave the risk on silver. Bitcoin, going to take the risk off as soon as I finish recording this video, and a trend line break of this trend line here will see me exit this trade for a profit. The exact same is true for Ethereum. I will exit on a trendline break or at 2200 or into this downward sloping trend line, whichever comes first. And I will take the risk off of this trade as well once I finish recording. MATIC, we've already taken the risk off of. Trendline break here, I will exit. Or if Ethereum could do some explosive move, then it should drag MATIC up. But likely, I think the trendline break is going to be our exit for this. I kind of am losing faith in MATIC having a big pump in the short to medium term. So a big pump up and I'll exit above $1, or a trendline breakdown and I'll exit MATIC as well. In the meantime, we continue to watch the dollar as it rolls over. So I hope you found value here today. I hope that's clear. Let me know in the comments if there's anything you want to see from me. Let me know in the comments if there's anything you want me to cover in more detail. I hope you have a lovely weekend. We've got scorching hot heat where I am, but I'll be trying to put some content out over the weekend. Until next time, take care of yourselves. All the best. Cheers from me. Bye.